Son of a...
Cryptoslo, cryptocurrency news and investing.
Cryptoslo with more crypto gains? I'll tell you what, the beginning of the video, I'll tell you, today I wake up, Bitcoin's down again, and I'm like, I'll tell you, what can I do to make some gains? What do I gotta do to make gains in 2019? Come on! So, anyways, you look at the price chart of ETH, and it's almost been a year, and we're back to where we started from. The entire year, and we're back to where we started from. So, with that, I thought it important to talk about taxes. So, first and foremost, I'm not a CPA. I am an analyst, and I do finance for a living, but I'm not a tax accountant. However, I do know some of the basic things surrounding crypto. So, the question is, if we're back to where we started from, price-wise this year, and you most likely have made some bad trades, you have to capitalize on that, on your taxes. Everyone's like, hodl, 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 but hodling does not make you any paper benefit at the end of the year. And what do I mean by that? Well, typically, let's say you bought 100,000 Tron, you paid 4 cents. So you had, your it was worth $4,000. Well, now Tron's 1.2 cents. Now you have $1,200. That's a $2,800 paper loss. Now, you don't get that loss until you move into something else. So what you can do is you can sell that Tron before the end of the year and move it into Tether, right? Take the paper loss and then buy back your Tron or whatever crypto assets you want to at the beginning of the year. Maybe move it back to Bitcoin or something. But the point is the taxable event, your loss is not seen until you actually move from one crypto to the other crypto. So you're like, well, yeah, what do you mean? Well, remember, the average person, if you work a day job, you're paying 20 to 25% of taxes. So if you have a $3,000 loss, right, you just put 3 times 25, you just put $750 in your pocket. Okay? So let me give you another example. You bought Bitcoin in the middle of the year at $10,000. It's now $6,000. You've lost, technically, well, you'll say, well, I haven't lost anything, I haven't sold. Well, yeah, dummy, but then you don't get to write it off on your taxes. So, if you sell that Bitcoin, move it into Tether, $4,000 loss times your taxable rate of about 20-25%, you just put $1,000 in your pocket. So, what is the point of all this? The point is now, be aware of what's called wash trading, where you can't double stack that gain moving into the next year or loss. So if you buy it, the same asset back within 30 days, that's typically called a wash trade. I'm not sure typically how that affects cryptos, but just be aware of that. You can't sell it December 31st and then buy back on January 1st the same asset and try to take the loss. You have to wait 30 days, so you have to move into something else. So let's talk about how do I do it and what are the risks. Okay, let's cover the risks. The risks are, number one, that you sell your assets to Tether December 31st, right? January 1st, everything moons. Possible, but not probable, right? What we're learning about crypto is this is a long road. A long road in the sense that 1 year, 2 year, 3 year, 4 year, it could take 5 years. Who knows? It's fantastic technology. It just has not reached that tipping point yet. So, the number one risk is that you sell your assets to Tether or whatever, or a stable coin, and the asset immediately moons up 2020. Like I said, possible, but not probable. Don't come crying to me if you do that and, you know, it goes up $500 and you're like, I can't get my Bitcoin back. That's, you know, that's the risk you take of taking that paper loss. Again, this is about maximizing your taxable income related to the crypto. The fact is, crypto is back to where it started from. Some cryptos are way down if you bought in the middle of the year. And honestly, in my opinion, you're really dumb. Hold on a second. You're really dumb if you don't maximize those taxable write-offs. So, in a nutshell, and then let's go how I would do it. Okay, first and foremost, if you had cryptos you sold, if you had some Tron, you bought it at high, you sold, write it off. You're like, how do I do that? Well, on your taxes, you just enter your cost basis just like any other stock. Okay, and now, if you're sitting on some Bitcoin or something else that has lost value and you bought at a higher rate, what you would do is you would move it into Tether or something else before the end of the year. I personally will probably wait until as late as possible, the 30th or the 31st, to do it, most likely. If I'm going to do it. If I don't see Bitcoin, you know, all of a sudden jumping up. But from that standpoint, I don't care if Bitcoin goes down because I'm writing that shit off. We're going to write it off. So, because I'll buy some crypto back in 2020. You know, I'm not exiting the system. I am just realizing the paper loss, which really isn't a loss to me because I'm just going to buy some more crypto back, on my taxes. So, you know, don't let that happen. Oh, also, if you had any exit scams that happened to you, you have any screenshots or TXs, right? Remember, you have to prove your sale. So, you know, keep that in mind. You've got to have some kind of tracking mechanisms. But if you invested in something and it totally exited out on you, you can take that as a Ponzi loss. There is a spot on your taxes for investment scams and losses. So, and yeah, so that's it. That's all there is to it. The point of today's video is you can write off some of this crypto. You know, if you've got a $5,000 portfolio, it was, and now it's a $1,000 portfolio, write that shit off. Write it off. So, because I know that you're not going anywhere, and you'll just buy a lot of your crypto back at the beginning of the year. So, with that being said, this is Cryptoslo. If you're not talking taxable gains, then we're not talking.